a set of sovereign funds and large institutions that have, over the last 30, 40 years, evolved to becoming really, high-quality investment institutions, such as Mubadala, such as ADIA, such as ADNOC, and MGS, and ADQ. We have many institutions that are coming out of that ecosystem in the UAE, very mature ecosystem in terms of institutions that are investing globally. The the United States represents the biggest, obviously, market for these institutions. That's been the case for the last 30 years. It will be the case going forward because, obviously, the merits of this economy, this great country that has consistently delivered high-quality economic output with companies and businesses in sectors, at least, and I'll come to that particular question, the sectors we like consistently. So the U.S. economy will always be, I think, a major destination of capital coming from UAE institutions. That will change. So accordingly, I think looking at a 10-year horizon, which was effectively that declaration that was disclosed, it follows the strategic investment plans of all these institutions, looking into account the last 10 years and how they've invested, and looking at the next 10 years and how we intend to invest, both in terms of the economy and the sectors we like. What are the sectors we like? Obviously, technology is a very important space. It's a space that I think, notwithstanding what happened to your first question, doesn't change thematically that the U.S. will continue to be a leader in that space, and that is an investment space we like to invest in and we will continue to invest in. Infrastructure is another space we like, and I think, again, the thesis continues, and I think our conviction of that sector in the United States continues. Energy is another sector we're very, I would say, capable of investing in. It's an area we've done very well over the years, and we will continue to invest. So just looking at these three general themes, energy, infrastructure, and technology, that represents what we were looking at over the next 10 years. And with the companies and investment solutions I've just described, that fits the theme, and that's why we're doing what we're doing. And over 70 years around the world. So it's quite, what we've seen also is how the world's been resilient, and the economies have been resilient throughout these quite interesting events over these last 5 years. Now, this is, again, more volatility that we're seeing here today. The funny thing, well, I don't know if it's funny, but the interesting thing was that when we were looking at end of 24, closing 24, from my perspective, looking at the next 5 years, as I was working with my management team in Mubadala, it looked okay. I remember closing the year out in 24 and saying, wait, listen, we weathered these 4 or 5 years, quite difficult, we did very well, happy with our performance, happy how we managed it, and now things look a bit clearer. I think the Trump administration had obviously won the election, we knew what was coming, pretty much anticipated what we thought was going to be coming this year, and it looked like, relatively blue skies, some clouds here and there, manageable overall. Tariffs, obviously, this is the subject matter of the day. I think everybody expected this division. I believe that. I think people are going from a different tariff environment April 1st to a new tariff environment, or whatever it is, post April 2nd. So I think is unquestionable. I also believe that I think the impact of that change on growth is also clear, that there is an impact. Now, the size of that impact, we will all have different opinions on that, but there is an impact on growth, both global growth and growth in the U.S. economy, in the